Thursday, June 2nd, 2022, Monaco 64, home of alternative economics and contrarian views. We've got a lot of ingredients out there in the financial markets, in the economic world, in the political world that, in my opinion, are pointing to the launching of the crack-up boom or the hyperinflation. And it could be this summer, the summer of 22. And it's ironic because back during the German hyperinflation or the Weimar Republic hyperinflation, it started in the summer of 22, of course, 1922. So we're going to look at that today. Before I start, I'd like to thank all of you again for your interest in the channel. And if you're here for the first time, make sure you go into my channel and look at all the material I've uploaded over the years. We started looking into the economy and making videos back in late 2015. We've been warning people about inflation and hyperinflation actually all those years. And I think we're getting to a point where things are starting to kick off. So thank you again for your support. And make sure you subscribe to the channel and hit the notification bell to be notified of all my new videos. So I'm going to reference a book that many of you probably know, and some of you that don't should get this. You could get probably a free PDF online from the Mises.org website or any other place, or you could buy it as well. It's When Money Dies, The Nightmare of the Weimar Hyperinflation by Adam Ferguson. And the thing about hyperinflation is that it's a little bit like, I think it was Hemingway who said that people who go bankrupt, it's a slow process, and all of a sudden they're bankrupt very quickly. It happens like overnight. And unfortunately, I think we are at a juncture where this could be happening, and I'm going to tell you about why. And I just want to go through chapter 6 here. It's entitled Summer of 22, and then I'll show you some charts of the paper mark during that period, the charts of CPI in Germany in the beginning of the century during the Weimar Republic, and even before the Weimar Republic, because the Weimar Republic I think was only founded right after the war, 1919. I could be wrong, or 1918. I might have gotten the date wrong there. So, summer of 22, the murder of the apostle of fulfillment, a statesman whose cosmopolitan approach transcended the narrowness of nationalism, burst the dam and sent the mark skidding off the plateau it had occupied since the beginning of April. The currency once more collapsed, a word which must serve again, although it scarcely permits adequate description of what was to come, from 1300 to 1600 to the pound at once, and within a week 2200, nearly 500 to the dollar. So of course back then it was just the mark that was hyperinflating. The dollar and the pound were as good as gold. But now all currencies are fiat currencies. They're all gonna go the way of the Reichsmark, unfortunately. And the ultimate measure of value, or yardstick of value, is gonna be gold and silver. And that's what it was back then. But the interesting thing about today is that it's a global phenomenon. It's not just happening in one country like Germany. So let's continue here. Not Rathenau's death alone celebrated as it was by a general strike in Berlin, was a warning to the right, lay behind the latest fall. In Bavaria, for example, the state finances were already in a hopeless condition because of the incapacity of the revenue officials to deal with the overwhelming arrears of tax, and because of the estimated deficit for 1922 had doubled. Although reduction of expenditure was easy to preach and as difficult to carry out in Bavaria as anywhere else in the world, the continued steep decline in purchasing power of the currency made things vastly more difficult. In June 1922, the authorities had not yet dealt with the federal taxes for 1920, an echo of the central government's own difficulties. So I'm going to stop here. Yeah, I know governments in the West right now, they're still collecting taxes. But one thing that is worrying is that bond yields, government bond yields, they already started going up quite a bit, of course, in the US. They've gone from 1.5%, the 10-year, at the beginning of the year to almost 3% right now. It's around 280 something. It has been as high as 315. But now we're starting to see European government yields really pick up. They had been lower than the Americans, mainly because we haven't spent as much as the Americans in Europe, probably because we don't have the reserve currency. We don't have that privilege to be able to print quite a bit. But if you look at this chart of the gilt yield here, and this is quite worrying. We hit a high yesterday, a high we haven't seen since 2015. So it's a 7-year high. It's above 2 now. It's around 215. And I was wondering when that was going to happen because we've been testing the 2% level for a while, for the last few months. And the interesting thing as well is that yesterday we saw gilt yields go up and the pound go down, and that's a very bad signal. I think it's going to happen everywhere. They talk about general strikes there. We're getting general strikes here. We're getting shortages. I think, this collapse might not happen exactly like it did in Weimar with people carrying banknotes in wheelbarrows. But I think the way it's going to be reflected is in shortages, businesses closing down. And why is that? Well, because businesses can't survive, because costs are up to here. The currency doesn't really work anymore. And I wanted to show you, I have a follower on Twitter. He's a pub landlord in the north of England, and he sent me this yesterday on Twitter. And he said, remember, there is no inflation crown. Have a look of what they were proponents of. So there's still a lot of people out there, still in the mainstream economic profession, that say the slowdown of the economy is going to help contain inflation, but they're wrong, because there's going to create more and more shortages, because the slowdown is to do all with the currency. It's not a business cycle. So he sent me this. It's from the caterer.com, and it's here in the UK. Of the 200 businesses surveyed, 53.2% were seeing a 30% increase in operating costs compared to pre-pandemic levels. 44.7% were unsure if their business will survive the next 12 months, with an additional 20.8% stating they were not confident. Those who had renewed both gas and electricity contracts in the last 4 months have seen a 37% increase in energy costs, with contract renewals in electricity seeing up to a 54% increase, and gas contracts seeing up to a 151% increase for businesses. The NTIA also said there was still some way to go to see the true impact of inflation. They call it cost inflation, but it's inflation, with over 53.8% of businesses still to renew energy contracts. Meanwhile, and here we go, this is what is really interesting. It shows that just because things are slowing down doesn't mean costs are going to go down. Meanwhile, 36.5% of respondents said their weekly sales had dropped by 30% in comparison to pre-pandemic trade levels, and respondents on average were still carrying 133,957 worth of supplier and bank/loan debt. 54.8% of respondents said their business had little scope to increase prices with their local market, with a further 20.8 stating they had no scope whatsoever. So what's going to happen there? There's going to be closures. Businesses are going to shut down because they can't raise prices, but the people that survive will have to raise prices. Michael Gilt, chief executive of the NTIA, said these figures are extremely hard to ignore. The situation is worsening day by day, with operating costs becoming untenable. We are starting to see the impact on customers through slowing ticket sales, bookings, and frequency of visit. So there you go. In the service sector, is just going to mean closures of a lot of businesses, and the ones that survive, they're going to raise costs, raise the prices because they can. So again, what's the best way to protect yourself, in my opinion, in a crack-up boom or currency collapse or hyperinflation? I've said it all along. You need to get rid of your fiat currency. You need to have physical gold and silver in your possession if you can. And some of you, of course, are frustrated with what gold and silver have been doing. But just to give you an example, back in 2015, when the gilt yield was as high as it is now, the price of silver was between 10 and 11 pounds per ounce. And right now, yes, it should be a lot higher. It's only around just above 17. Of course, it costs a lot more to buy the real thing. And the same thing goes for all of the currencies. But I'm looking at the UK here because that's where I am. A lot of my viewers are from here. And gold, I mean, gold has been a great hedge against this currency debasement, because back in 2015, and I remember that well, when we moved to this house, gold was trading below 800 pounds, and we're now at 1,477. And yes, it's been a frustrating period right now in the last 2 years, but have a look at the German mark, or versus, the Reichsmark versus gold. It really started taking off after the summer of 22, as you can see. And after it went over 1,000 or even 10,000, for example, you probably wouldn't have been able to exchange your Reichs paper marks for real money. And that's why it was really important to accumulate it here, like from 2018 to the beginning of 2022. So even during their inflation, post World War I inflation, gold went sideways. But it's that old saying, all of a sudden you couldn't get it anymore. And the same thing with CPI. Yes, it had been rising all through World War I. Wars always create higher prices or currency debasement because governments, they waste money and they borrow to fight the war, to destroy things, so people will die. I mean, that's what wars are all about. I mean, there are people who make a fortune from it. I recommend War is a Racket by Smedley Butler. He talks about that. But yes, if you remember well, ever since the '08 crisis, everything has been going up. Not only in the UK, but everywhere else. There was a lot of talk about shrinkflation. It wasn't just after COVID that we started seeing rising prices. And the same thing happened there. After the war, end of the war, CPI started picking up here in Germany. And it wasn't until like the summer or summer of 22 that it's really started taking off. So what concerns me is that we could see a lot higher prices starting this summer. There has been a lot of talk that food prices could double very soon. We've seen here in the UK that they're looking to ration electricity this coming winter. And yes, the other thing about the Weimar hyperinflation is that they had very weak leaders, and we do have the same kind of leaders. I mean, when the head of the U.S. Treasury and former chairwoman of the Federal Reserve doesn't really know what inflation is and apologizes for it, you need to be concerned because she doesn't know that we're probably in the cusp of a hyperinflation. So with that, let's quickly look at where the markets are this morning. So it's 10 to 9 a.m. London time. I think, yeah, it is a bank holiday here today and tomorrow, but the markets are still trading. We've got spot gold at 1852. It's up just over $6. High's been 53 and the low 44. Silver's up 16 cents or 0.75%. Smack at 2200. The Dow future is up 39. Nasdaq 100 future is up 42, and S&P is up 9 points. FTSE is up 30, just under 0.5%. Euro Stoxx 50 up 0.5%. Quickly through the currencies. Yeah, we're going to see a lot of volatility amongst fiat currencies. Yesterday, the pound dropped a lot. Today, it's up a little bit, 0.33%, 125.28. The euro is at 106.87, up 1/3 as well. The dollar's down 0.2 versus the yen, 129.86. The dollar's down 0.5% versus the Swiss franc, 95.90. The dollar's down 1/3 versus the yuan at 667.50. The ruble, let's see where the ruble, well, ruble is pretty steady, trading around 63.5. And I think the Russians know that this is coming, and that's why, they're doing what they're doing with commodities, I think, and with their currency in relationship to gold and natural gas and oil. And I think they're going to be in a good position in the aftermath of the currency collapse in the West. To the other currencies, Aussie dollar is up 1/8 at 71.82. The dollar is unchanged versus the Canadian dollar, 126.59. And the Kiwi dollar is up 0.2 at 64.94. General commodities, WTI crude is down over 2%, 111.55. Brent crude is down 2 as well at 113.54. And don't let Janet Yellen or anyone else, Andrew Bailey or Jay Powell, tell you that it's oil that's causing inflation. No, it's just a symptom of the inflation that we've had really in spades since the collapse of '08. It's all flowing into real things right now. High-grade copper is up over 1% at 438.60. US nat gas up slightly at 870. And to finish off, let's have a look at the 10-year yield. That's at 292, down just over 1 basis point. So if you enjoyed this video and you're not subscribed to my channel yet, make sure you do. And yeah, I wish you all a great long weekend if you're here in the UK, and a great day if you are anywhere else in the world. And take care. Bye.